Hi, this is Kerry Artak with Wicked Stocks bringing you your daily Tesla report for Thursday, May 9th, 2024. But before we check out the charts, I just want to ask you to please click like, share, subscribe, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the daily Tesla and daily NVIDIA reports, daily analysis in the SPY, daily analysis in the Triple Q, weekly analysis in the S&P 500 index, the NASDAQ 100 index, and Apple stock, as well as two individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near term investor, always looking for 20% moves or more on those underlying stocks. And you get to see all of this for free. We offer a 5-day free trial up front. So check out wickedstocks.com. Let's take a look at the charts. I'm going to start with the daily chart here and just show that it is this channel top today at 171.80. The same formation on the weekly chart is found at 173.86. So it is a range a little over 2 points wide. But having gapped above the 171.80 formation, 2 weeks ago this Monday, a week ago last Monday, did indicate 202.96 as a 1 to 2 week objective. We're a solid week into that now with no real upside consequence, but nonetheless also anticipating, within 1 to 2 months, 225.52. Now, of course, if over the next week or two we settle above 202.96, then we're just another week or two away from reaching 225.52, which is a longer term channel top that by that point in time will be almost a full year in making and able to contain quarterly buying pressures when tested. But bottom line, holding above 171.80, a formation that we actually did open below on Wednesday morning, but we pushed back above it pretty quickly and held above it really for the day. 171.80, the beginning of a range up to 173.86 that we are just above, able to contain selling through May, and above which, with the present price location, you could say this is more 2 to 3 weeks at 202.96. But if we get a spike here for the next day or two up to 187.13, this newly formed descending channel top, it can, yes, contain daily buying pressures, but if we can close above it, then we are merely 3 to 5 more days away from reaching 202.96. So there is a scenario that if we get up and over 187.13 sooner than later, we're just another full week away from 202.96. So 3 to 5 day swing traders can buy 171.80 in anticipation of 187.13. I think this is a realistic 3 to 5 day swing trade. We might reach this within 2 to 3 days. And 2 to 3 week swing traders, 202.96. And as I mentioned a moment ago, 1 to 2 month traders, near term investors, 225.52. All true above 171.80. This despite, Wednesday's break back below this formation open, but we did close above it, and it really is a settlement signal that I've used. So if we were to close below 171.80 on Wednesday, that would have been another story altogether. We would have expected the upper 130s again within 2 to 3 weeks, but right now we are still kind of by a thread, bottoming out and trading above meaningful support. On the way up today, I do have 180.77. Nothing more than a simple trend line off these highs, not shown anywhere, but I can tell you that's what it is. It correlates with other things on the chart. 180.77 can contain intraday, possibly daily buying pressures. And so in terms of the day trade, I do still think it's buying 171.80 and then selling, taking profits at 180.77. And if I'm going to say close today above 180.77, we should tomorrow then test 187.13. This descending channel top able to contain daily buying pressures, possibly into later next week. But because of the overall bullish nature that I think this market has presented above 171.80, I want to keep it light here. I don't want to encourage, selling on a weekly basis. I do think, though, you can consider this to be a 3 to 5 day pivot point. And closing above 187.13, 3 to 5 day swing traders go long, stay long up to 202.96 where profits can be taken. And a short sale set at 202.96 as we move into later May, early June. That is what is possible at 202.96. But once again, I just want to underscore that I think 225.52 is in reach following the settlement over a week ago above this 171.80 channel top, a formation that we tested last week and have obviously tested Wednesday of this week. And we are above it. And I think there's nothing really to do here but go long and stay long. If your time horizon is 3 to 5 days, once again, you're expecting 187.13. And if it's 2 to 3 weeks, it's 202.96. And if it's 1 to 2 months, yes, 225.52. Options traders, if we're slipping into the low 170s, you might consider reaching for 200 strike out of the money calls that don't expire. I would go a month out on this expiration. And also 220, 225 calls that don't expire for at least, I would go 3-4 months out on that expiration. So I think that pretty much covers the upside. Let's talk about the downside here, that if we do happen to, and this is the wrong image, if we do happen to break or open, as we did on Wednesday, below 171.80, 164.71 is in reach today. And if we do close then today below 171.80, I do see the upper 130s in reach. Within 3 to 5 days, it would be the low 160s, upper 150s. But within 2 to 3 weeks of closing back below 171.80, let me sort of back up a little bit and mention that if you've been long, if you got long over the last week or so above this 171.80 formation, closing below it is your indication to take your losses earlier rather than later, and consider reversing, playing the short side into the upper 130s. I would then expect this 139.42 trend line once again within 2 to 3 weeks, where we can bottom out on a weekly basis. I think that pretty much covers it. I'm going to leave it at that for Thursday's Tesla. I'll leave you with this image. This is the most appropriate one for the day. I'll be back, of course, tomorrow with Friday's Tesla report. You have a great day.